Ghana has just ripped up a $1.2 billion bauxite deal, shattering the dreams of a local company and throwing open the gates for foreign mining powerhouses to swoop in. The move targets one of West Africa's most valuable untapped mineral reserves, sending shockwaves through the global aluminum industry. The obvious questions are, why cancel such a massive deal now? And what's really driving this decision, with international mining giants already circling? At first, the news trickled quietly through political circles, but it quickly exploded. Across international finance desks, the Ghanaian government announced the termination of a bauxite mining lease, granted to Rocksure International, a local firm once celebrated as the future of Ghana's aluminum ambitions. The lease covered the Nyinahin Hills, home to an estimated 376 million metric tons of bauxite, one of the largest untouched deposits in the region. The site was meant to power Ghana's first fully integrated aluminum industry, pairing raw mining within country refining to keep profits, jobs, and industry within national borders. But in one government statement, that vision collapsed. The official reason sounded technical. The contract had never been ratified by Parliament. But beneath the legal explanation lies a much bigger shift in strategy. By cutting ties with Rocksure, Ghana effectively signaled that it was done waiting for smaller domestic players to scale up and was instead turning to heavyweight foreign investors with deep pockets, advanced technology, and global networks. Within days of the announcement, Dubai-based Emirates Global Aluminium signed an MOU with Ghana's state-owned Aluminum Corporation to explore development projects. Chinese mining firms have also reportedly been moving quietly in the background, eyeing the reserves and potential refinery projects. The timing is no coincidence. Aluminum demand is surging worldwide, driven by electric vehicles, renewable energy systems, aerospace, and high-tech manufacturing. Ghana, with an estimated 900 million metric tons of bauxite in the ground, holds a golden ticket, but it's a ticket that must be cashed in fast. The government seems convinced that relying on small local firms could cost the country its competitive edge, especially as neighboring Guinea has already secured billion-dollar deals with China and the Middle East, becoming the world's top bauxite supplier. Rocksure's project was supposed to be a patriotic model, with a Ghanaian company holding 70% ownership and the rest split between the state and government. But the numbers were brutal. The development required billions to build not just the mine, but also a refinery and the infrastructure to support it. Despite big promises, Rocksure struggled to secure the funding. After years of delays, the project remained mostly a paper plan. Meanwhile, Guinea was shipping millions of tons of bauxite annually. While Ghana was still debating contracts for the government, patience ran out legally. The contract was vulnerable. A 2019 Supreme Court ruling made clear that any mineral lease without parliamentary approval was null and void. Politically, canceling the deal allowed the administration to present itself as cleaning up past mistakes, while pivoting toward investors who could deliver immediate results. This was more than a cancellation, it was a reset of Ghana's entire resource strategy. The Nyinahin Hills are no ordinary deposit. They alone could supply a modern alumina refinery for decades, fueling industries from packaging to aviation. But Ghana's historical problem has been converting raw resources into processed products. Since the 1960s, when the Volta Aluminum Company was created under Kwame Nkrumah's industrial vision, underinvestment and shifting politics have kept the dream out of reach. By bringing in mining giants like Emirates Global Aluminium and major Chinese corporations, Ghana hopes to leapfrog the slow, incremental approach and build the entire industrial ecosystem: refineries, power plants, ports, and railways needed to finally take its place in the global aluminum supply chain. But this shift is not without risk. Foreign investors could accelerate development, but might also tighten their grip on Ghana's resources, exporting raw ore instead of refining it locally. The government promises that any new deals will prioritize domestic processing and jobs, but skeptics warn that international corporations often chase profits first. Still, Ghana is betting big. With the aluminum market entering an era of unprecedented demand, the country has decided it cannot afford more delays. The collapse of the Rocksure deal marks the end of one chapter and the beginning of a high-stakes race to turn Ghana's vast bauxite wealth into industrial power. Before the opportunity slips away, Ghana is placing a massive bet on its future, one that could redefine its economic trajectory. By canceling a high-profile $1.2 billion deal with a local firm and opening the door to global mining giants, Ghana is signaling a dramatic shift. The goal: to stop being just another raw material exporter and become a dominant force in aluminum production. Across West Africa, this move isn't just about a single contract, it's a transformation of national vision. But can Ghana attract the right partners without repeating the painful lessons of the past? At the center of this bold new approach is one name drawing major attention: Emirates Global Aluminium, or EGA. So why is this global heavyweight suddenly so interested in Ghana? And what does its rival really mean? Not long after Ghana made the Rocksure deal history, EGA emerged as the frontrunner in Ghana's search for serious development partners. And for those paying attention to global resource politics, this wasn't a surprise. EGA isn't just another mining outfit, it's the largest premium aluminum producer in the world, managing the full chain from bauxite extraction to aluminum smelting. Its presence in Ghana means this is no longer just about digging rocks out of the ground. This is about power, influence, and long-term industrial positioning. EGA had considered investing in Ghana as early as 2022, but held back due to its existing operations in neighboring Guinea. With a valuable license in hand, EGA had been sourcing bauxite from Guinea to feed its massive smelters in the United Arab Emirates. But things took a sharp turn when Guinea pulled EGA's license due to delays in building a promised refinery. Now forced to secure a new supply, Ghana's untapped Nyinahin Hills suddenly looked like the perfect fit. Within weeks of the Rocksure lease cancellation, EGA signed a memorandum of understanding with Ghana's state-backed aluminum agency to explore new opportunities. Why does EGA matter so much for Ghana's aluminum dream? It comes down to three key advantages: money, stability, and strategy. First, EGA brings capital on a scale that few companies can match. Establishing a full aluminum value chain from mine to refinery requires billions in investment, reliable infrastructure, and consistent energy. EGA has done it before in the UAE and has the muscle to do it again. Second, Ghana would gain market security. Aluminum prices are notoriously volatile. Having a strategic partner like EGA means Ghana can potentially lock in long-term demand, helping to shield the country from the highs and lows of global commodity markets. And third, it helps Ghana diversify away from an over-dependence on Chinese-backed projects, something that has raised concerns across the African continent in recent years. But there's a bigger play happening here. EGA doesn't just want Ghana's, or it wants a base in Africa's growing aluminum landscape. With global demand rising fast thanks to electric vehicles, renewable energy, and lightweight construction, aluminum is becoming a high-value commodity. Ghana, compared to some of its neighbors, offers a more stable political climate and a government clearly eager to industrialize. That's why EGA is stepping in now still. This partnership raises critical questions. Will EGA help build local refineries and create skilled jobs in Ghana, or will it simply extract raw ore and ship it abroad? Can the Ghanaian government negotiate terms that include technology transfers, workforce development, and fair profit sharing? These are the issues that will decide whether this is a game changer or just another resource deal that leaves local communities empty-handed. The arrival of EGA is both an opportunity and a test. If the partnership results in a full-fledged aluminum industry complete with refineries, power plants, and downstream factories, Ghana could leap ahead of its regional rivals. But even as EGA takes the spotlight, the bigger picture raises new challenges. What does this shift toward foreign giants mean for Ghana's long-term economic independence? Ghana's decision to walk away from a homegrown $1.2 billion deal and welcome international powerhouses isn't just a matter of economics. It's a bold attempt to reimagine its national identity and influence in the region. For years, Ghana's resource wealth has centered on cocoa and gold. Meanwhile, its vast bauxite reserves remained largely untapped. But now, with global aluminum demand skyrocketing, the country sees an opportunity to climb higher on the value chain. The focus is no longer on exporting raw materials, it's about creating finished products for global markets right from Ghanaian soil. The potential payoff is huge. If Ghana can establish an integrated aluminum sector, mining, refining, and manufacturing, it could generate thousands of skilled jobs, grow its industrial base, and attract new industries like electric cable manufacturing, packaging, and even auto parts. In a region where Guinea has dominated bauxite exports to China, Ghana could emerge as the first to truly add value at home. That would shift the balance of power and present a new model for how African nations develop their mineral wealth. But this isn't just about business, it's also deeply political. By inviting EGA and other foreign players, Ghana is walking a tightrope between attracting capital and maintaining sovereignty. Critics argue that bringing in multinationals risks repeating history where African countries mine their wealth but see little transformation on the ground. Supporters, however, argue that without large-scale investment and technology, progress will remain out of reach. Success depends on the deals Ghana signs now. Will they include strict requirements for local hiring, skill development, and environmental protection? Will profits be fairly shared and infrastructure built to last? These are the building blocks of a successful industrial future. And there's another layer to this story: geopolitics. By partnering with EGA, Ghana isn't just diversifying its economy, it's also strategically balancing its foreign alliances. For too long, China has held a near monopoly over African resource contracts. Now, with a powerful Middle Eastern partner stepping in, Ghana is signaling that it won't be tied to just one bloc. That could give the country stronger leverage in future negotiations and reduce long-term dependency. Even so, challenges remain. A successful aluminum industry needs more than bauxite. Ghana will need reliable energy, efficient transport systems, and a workforce trained for industrial manufacturing. These are gaps that must be filled quickly if the country is serious about its vision. And expectations at home are rising. After canceling a Ghana-led deal, the government must now prove that inviting foreign investors will deliver results that benefit ordinary people. In the end, this isn't just about a mine or a company, it's a defining test. Can Ghana finally move from being a commodity exporter to a modern, value-added economy? Can African nations strike deals with global players that serve national interests without giving away the farm? The next few years will answer those questions. If Ghana gets it right, it could become a beacon for the rest of the continent, a country that turned its natural wealth into long-term prosperity. If not, it may just become another cautionary tale in the long, complex saga of Africa's struggle for economic transformation.